Welcome back to the Eric Krown Crypto channel. Wishing you a happy New Start to Nice Tuesday morning over here as we prepare for some big moves, baby. Some big moves probably spun upon by tomorrow's catalytic event. That's going to be the FOMC meeting. And I suspect that today is also going to have its own trials and tribulations in the short-term time frame. So rather exciting time. And of course, following up on the higher-term time frame macro look, as there is a few new pieces of information to update on. Other than that, I wanted to announce that for anyone who does have the quant program, you might want to take a look at the content yet again. There is 20% more new strategies, if that's good English, and then also a ton of other videos as well, or I would say a good amount of other videos as well. Sweet. Oh yes, and regarding the new update, so also if you do have access to the quant program, you now have access to the Discord community in the members section. If you want the actual access, then what you need to do is you need to email support@krowntrading.net with a verification of your receipt or something like that, and let Elsa or Stephanie know that you should have access there, and they'll add your access. You can also hit them up on Discord as well, but probably email is just the best way to do it. All right, sweet. And by the way, that's probably going to be very, very messy for the first few days here as everyone gets situated. All right, okay, let's jump into it right now. We're going to start it off with Dixie. The Dixie Hopium continues, I do believe, of which, again, today is Tuesday, tomorrow is Wednesday, the FOMC meeting. On the FOMC meeting, I do expect this chart to really start to move, this asset to really start to move, that being Dixie, the dollar index. So ultimately, while we did get the short-term bounce that we were looking for yesterday, which did provide a bit of a downside bias on Bitcoin, I am looking at this as likely to put in another local high on the lower term timeframes. Not that I care too much about them, but on also the daily as well, somewhere within this vicinity, and very likely does continue on with the downside momentum coming into the later portion of this month, maybe catalyzed by tomorrow's event. So what essentially are we looking at here? The same things as before. Two extremes on the weekly volatility indicators right here does imply we're going to be looking for a counter trend movement. In this case, that's going to be a pullback. Four drives of bearish divergence on the weekly RSI, and the weekly Jewel had a sell signal as of 2 weeks ago, and it's continuing on with that coming into this week as well, it looks like. So ultimately, next move down, probably looking somewhere down around about $1.08 to $1.08.5. Probably another attempt at a bounce there, and then perhaps later this month or into December, perhaps another major leg down, because we are seeing extremes here. I do think that this would be one of the relevant times to be looking for one of the lower targets on this, which could bring it as low as somewhere around about $1.05, which probably does benefit risk on assets. What the hell is going on with my camera today? Don't know, doesn't matter. Anyways, let's now get into the next big piece. And by the way, of course, on the higher term time frame trends, the inverse relationship between Dixie and what we expect on risk on assets probably does hold into fruition here. Obviously, there is an invalidation, as there always is. There always needs to be. There's a non-zero probability of just being wrong, of course, in any endeavor. And in this case, any sort of a closure above the $114 highs, well, that would be it for me. And very likely the dollar wrecking ball continues, and who knows what the hell that looks like over time. Anyways, let's get into the monthly look now. This is the big one. This is the one that has been updated as of last night on the ding of November 1st. By the way, happy November 1st, everyone out there. Not that it's like a fucking holiday. I mean, that yesterday was Halloween, but whatever, man, whatever. People don't trick or treat here in Finland, by the way. They're just, they don't care, I guess. Anyways, yes, okay, so we have another tick on the accumulation distribution indicator chart on the monthly, which has accurately gotten all of the macro shifts in direction for Bitcoin since the dawn of time, which actually yesterday was the white paper day, so it's very fitting right now. Anyways, in this case, we do have a few new things to be aware of, but first let me explain the actual indicator and signal itself. Anytime that we've seen a slope change in the extreme zones, extreme red or extreme green, we have observed, macro shifts in direction. Definitely works better on the actual lows than the highs, but the highs still get it, within a good degree of the actual high itself. So in this case, I should first show you the results, as I've marked off with the green vertical bars all of the shifts in the slope changes at the extremes. You can see that it pretty well correlates with macro shifts in direction. For example, on the highs, not going to be perfect over here, as you can see. But good enough, especially considering that it did say, hey, maybe time to get out of the markets in March 2018. And price did obviously go about 70% lower from that point. Even told you over here in Jan 2020, a couple months before the old flu dump, that it was not the best time to be in. And of course, also did call the 2013 highs incredibly well. So what are we looking at right now? Well, on the bottom side, when we do look for a macro shift in direction from the downside to the upside, there's a few things of interest. First and foremost is, of course, the actual slope of this indicator itself. And as you can see, the slope is actually still to the downside, which is a good indication for myself to not be calling macro lows just yet. So a bit of a sombering piece of detail right here, and it does fit into the other piece of hopium analysis, which we were just looking at on Dixie right here, that while Bitcoin, could very easily see an extended rally here over the next couple months, I would still reserve caution that this is not necessarily like the low, if you will, or at least that's not the data that I have just yet. It is probably a major low and can rally up significantly from here. I mean, theoretically, and I'm not saying this is going to happen, but just put things in perspective, because the ranges are so big, Bitcoin could rally up on a monthly to like $40,000, over the next few months. Again, I'm not saying that's going to happen, and it'd still maintain its higher term time frame downtrend. So just to put things into perspective here, the trend isn't, reversing anytime soon. It's very likely going to take a long time. But this still says, hey, it's time to be, it's not time to be calling macro lows just yet. However, I do have a few other pieces of hopium here. The other one would be just the simple fact that it did hit this green horizontal line. Now, I haven't marked off these with the green vertical lines, but what I can show you is that actually does roughly correlate incredibly well to the actual tick of the lows on a closing basis on the monthly here. So we obviously already have hit that. And then if we were to draw a regression from the last few macro lows starting in, let me actually just zoom out a little bit here. When in doubt, pull it out, as the saying goes, right? You can see that did call incredibly well the August 2015 lows, the January/December 2018 lows right here, and the potentially fulfilling another trend line test on this regression coming into November. So that would be the other piece of hopium, meaning that we may very well see a slope change coming into next month, December. But for right now, January, in November, we'd obviously need to see the current lows hold and a rally emerge probably above the summer highs before that becomes a more relevant topic of conversation, bleeding into the overall higher term time frame hopium case for at least a significant rally, maybe even a macro low. But still, as of right now, I would still reserve the right to not call that just yet. All right, sweet. So let's now go back down into Bitcoin. Let's go into the lower term timeframes. Yesterday, we were looking at a likely move to the bottom side of the range, that being somewhere around 20,200. Looks like Bitcoin just about grazed that region in like the middle of the day yesterday. At least for myself over here in Finland. We're on the Eastern European time zone, and we also had daylight savings. So I don't know if other countries still do that, but I fucking hate it, man. I absolutely fucking hate it. It destroys everything. Like, I feel terrible right now as far as my sleep habits go, as it kind of destroys it. But we have basically the same thing going on today. And I suspect that we probably won't see resolution on this until tomorrow's FOMC meeting. I think that's going to be the big catalyst. And I really don't have a strong opinion on this as of right now. My strong opinion is that, one, we're going to see, well, the LARP lines on the on volatility on the lower term time frames playing out crazy. Although I do think that this will base a little bit lower for longer. And then two, likely, again, we're probably going to see another range day. Range would be resolved obviously to the downside below the same pivot as yesterday, 20,200 on a 4-hour time frame closing basis, and obviously to the upside would be 20,950, same time frame closure. In this case, if we do see a break of the bottom side of the range, I would be looking at that as a premature indication that we're going to see this whole range on the higher term timeframes confirmed as a local high, thus a lower high compared to the September highs, and also simultaneously confirming 1, 2, 3 drives of hidden bearish divergence. That would very likely be good enough to get Bitcoin back down to the overall weekly range lows, into the end of November, and then we get to play the game of, is Bitcoin going to bounce from these deadly levels yet again? The other thing would be, of course, a resolution above the range highs. which, you know, looking at the Dixie chart, I do think is somewhat relevant, perhaps tomorrow. And if we do see a closure above 20,950 on even a 4-hour time frame, I'd be looking for the next short-term leg to the upside, somewhere around the 0.5 Fibonacci retracement here. 21,350 to 21,700 would be the area that I'm looking for. Very likely a pullback there, and very likely does try for continuation. As I would set into motion a few other things, very important things on the higher term time frames that I do think hold a lot of weight. Anyways, let's go reference short-term time frame stochastic momentum. Like I said, I really don't personally, I don't have a strong opinion on this. I mean, if you put a gun to my head and said, Krown, call it right now, I'd say, dude, it's just magic internet money, man. You don't need to do this. You don't need to do this. It's not worth it. But I'd probably say, you know, maybe test somewhere down around the bottom side of the range on the short-term timeframes yet again. I would certainly not hold myself to that. However, let's go check out stochastic momentum and see where the pivots are, see if there's anything that's obvious right now. On the 12-hour time frame, we can see that it will be turning down as long as Bitcoin's below 20,625 or so, which current price action is very close to, only about 30 bucks away, so it really doesn't mean all that much as of right now. The 6-hour time frame is also pivoted at 20,630 actually, so very, very close here. Volatility in this time frame also rather low from this perspective. 4-hour time frame is also, it was going to be pivoted at 20,600, but it just closed, and now it updated to 20,475. But yes, that is the 4-hour time frame pivot. 3-hour time frame pivot is going to be at 20,550, and hourly is going to be at 20,550 as well. So you see a lot of these coming in very, 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 very close to each other. So that can help provide a little bit of a bias on the short-term time frame here. Anyways, other than that, let's now get into the fun portion of this analysis, or at least I think the fun portion, which is the daily CME analysis, looking at the volatility versus stochastic momentum chart over here. And there is a pretty big update with this one actually, coming into, again, tomorrow's event. And it is this. Well, first, let me explain the signal. The signal is this: volatility on the daily on CME getting to extreme lows, which are defined as anywhere below 10 percentile or more. The expansion phase from these extreme lows has led to an average move of about 24.25% over the course of about 2.5 weeks, and the stochastic also has been correct in getting the direction of that volatility expansion 83.33% of the time. Obviously, this signal fired off a little while ago and is continuing with its upside here as long as Bitcoin is now closing the daily on CME above 20,500. 20,500. I would even say, as far as a daily closing basis, is probably my line in the sand for becoming a lot more apprehensive about this current price action, probably even front running a nice reversal on the daily, very likely coming back down. Still would like to see things below the current range lows at 20,200 minimum, especially below 20,000 bucks. I think that's kind of a done deal for coming back down to the weekly range lows here. But just like before, I probably wouldn't call like a full-on collapse, even if that happened just yet. I still need to see the same things. I want to see an actual closure below the range lows. Again, now that was probably my biggest mistake, or that was certainly my biggest mistake in 2018. Right on direction, wrong on timing, and gave up certainly some potential profits there that I didn't need to do. So ultimately, that's what I'd be looking for. But in this case, as long as Bitcoin remains above this pivot, the ball is still in the Boulah's court. The statistics and probabilities continue to favor the Boulahs here. You know, it's gotten pretty damn close to the bottom end of the first targeted range, on the bottom end of the first standard deviation at 15%. That's going to be that $21,500 target, of which we kind of went over a little bit earlier. Yeah, 21.5 is 15% right there. 24% again if you do get continuation above that next target, assuming that there is continuation. Again, if it is going to happen, probably happens on the FOMC meeting or after the FOMC catalyst. The next target of interest would be in the mid 23s, 23.5 or so, and then obviously 33%, which is the upper end of the first standard deviation, puts Bitcoin at around the summer highs. That's when we can really start to talk about a greater rally on the monthly. And as you can see here, just very quickly on this chart, I mean, looking at even the weekly, Bitcoin has lower highs as long as you're below, 45,000 bucks essentially. So it could put in a pretty fucking impressive rally and still maintain that, which is also why I do, dare to say that this is probably going to take a long time, man. Probably going to take a long time. But that doesn't mean that there can't be some, pretty impressive rallies and dumps along the way that are very much tradable. Anyways, I think that's a good place for me to be leaving off on this particular video. Again, more or less a range day today. I suspect that this is mainly a setup for tomorrow's main event. And with that said, I want to wish you the best as always. Take care, much love, and see you hopefully soon.